Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing? Oh my God, guys. It's been a while since we talked. I'm exhausted, not so much because of work, but I have to admit, so I have this, I'm actually going to go to the ophthalmologist um, next week, but I have this thing. Um, I'm doing warm compresses on my eye, but this thing has been so freaking annoying. I have like this little sty in my eye, and man, it's just been like freaking annoying. So, do some warm compresses and gonna see what the hell's going on. Hopefully, it's nothing now. There's obviously other things in the differential you have to worry about. So, hopefully, it's nothing serious. Given there's some presentations that could be obscure in the sebaceous gland, I'm just gonna go ahead and get it checked out next week. But yeah, freaking tired, dude. Just my eye hurts, but um just probably gonna warm compresses. But anyway, been pretty busy on top of all that crap. So very good what's happening. We're above $3 1.68% increase. You could see from here, from $2.81, we're up 8.9% now. If you don't recall, we mentioned this back in June 18. We talked about how the MACD, I went ahead and squared it up. I said the MACD is reversing. So this could be a real maneuver. This was when the stock was at $2.84, I believe, June 18, which is right here. And I said, hey, this could be a reversal. If I can find this could be a reversal. And lo and behold, it certainly was. We increased by, almost 9%. And if we were to look at the MACD now, it looks like we have essentially crossed over, right? The question is it going to be sustainable? Now, one thing I want to just mention, I'm going to just zoom out real quick here. I don't like to move things without you guys seeing it. So I said this would be support. Obviously, that's failed. So I'm going to move it now to where it was, to reality. And you can see it's right around here. Right around here. So this is the new level of support, which coincides to this. I was thinking it may go to this one, but it broke out and it went to this base here. So you can see now, I think we're going to be trading within this descending triangle until we get to earnings, which is in the beginning of August, which is literally right here. Literally right here. Isn't that amazing? It used to be up here, and that wasn't, but now we realize it's down here. Let me make sure that's, yeah. So by August, we should get to that descending, and then we should float back up. Now, again, we may test 280 again. Who knows? But again, there's a lot of differences that's happened, especially with Oscar. Now, if you don't recall, I made a video in Oscar about 2 weeks ago. If you haven't checked it out, I recommend doing it. We did kind of the wheel strategy and how much money you could make. I went ahead and man, I don't have the screenshot. I have to hold on them. Let me find it. Oh, late at night, you know what I mean? So on May 28th, it's all date stamped. On the stock terminal, I said, "Hey, everyone, this stock will." Well, I mean, obviously, you can't see which channel I'm in. So we have our own Oscar channel, and I said, "Hey, this stock is going to go up." Obviously, you can't see this, so I have to give you the whole screenshot. So this stock will go up soon, and this is in the Oscar, right? So uh, that was May 28th. So if we go back to May 28th, which is right here, Oscar was around $13.89. And then from here on, we're up 52%. And before people basically start saying, oh, why is Oscar going up and not Clover? I'm going to go back to what I say again. It's all about free cash flow and net income. Okay. And if you don't know what that is, this is why we have our software. And this is why our, people that have our software win and people that don't utilize it lose. So, yeah, that's why, because it's all about free cash flow, positivity, right? Uh, and net income positivity. But overall, there's Oscar for you, and there's some sympathy rally happening with Clover. Now, there's a lot of things that we need to talk about. So first things first, we talked about the technical analysis. We talked about the video of Oscar. We talked about the screenshot. A lot of large accounts now are talking about Oscar. A lot of people are talking about Oscar now. And before, if you don't recall, we were talking about Oscar when it was around $2, right? You can look at our videos in the past. We have over 800 videos, right? So if you go ahead and click on Oscar here, and if you go all the way back in time, Oscar was $2.05. I think we talked about it in the 253, but it was used to be $2, guys. Right? It used to be $2, and you could see this, how this kind of channel that I had it going in, and obviously there's another channel here. You can grab another channel, and then it broke, and now we're about to start hopefully a new channel, right? And you could kind of see, what's happening. So ultimately, my point is a lot of these big accounts are going to start talking about Oscar, right? These people have no clue what this is. They're just learning about it right now. And what I'm basically trying to tell you is, Clover is in a period of reinventing itself. Okay. And I'm going to explain. Okay. So we talked about this. Very quickly. Again, we like to talk about the good and the bad. This lady here, she sold 20,450 shares. She sold them. Excuse me. This was not for tax loss harvesting. This was an actual sell. Now, before people freak out, she has 3.1 million shares. So that's like 0.6% of her, less than 1% of her selling. So I don't know what's going on. I think code S is for selling, right? But I don't know why, but maybe she had something difficult. I mean, maybe she just got tired holding the bag. I don't know. But she she didn't sell a lot, right? She sold a little bit. And I think maybe she probably has some bills or something. I don't know. But the reason why I bring it to your attention is this is something that I'm monitoring, and we're going to go ahead and keep an eye on this. So obviously, if there's continuous numbers of sales, then we should start maybe worrying about it. Okay, but as of right now, it's I'm not worried. I'm just bringing it up to your attention. It's a talking point. Okay. We're going to talk about Cerner, but first, let's talk about a couple things. Here's Sasha. Oscar breakout. I think Clove is next, or it is. I think Clove is it. So people are starting to talk about, free cash flow positive and all 33% year growth and all these things, yada, yada, yada. But the point is, you're going to see a lot of new people start coming in online and start talking about Clover, right? And it's pretty much, how things are going to, transpire. And again, I've seen this. I've been in the stock market for over 14 years. I've seen this play out a lot. Not so much in Twitter because, again, this is kind of a new thing, this whole thing, but just kind of how the market looks at Clover, right? So, or looks at us, the stocks, right? So, Vivek went ahead and retweeted this. This is no longer available for some reason. I don't know why, but I read it, so I can tell you it's what it is, but it's a Waymo versus Tesla. And Waymo did traditional machine learning. Tesla did swapped out its manual and put more of a generative stack in a way. And um, obviously Tesla's going to be winning from what it looks like. Um, and the thing is, a lot of healthcare companies are doing what Clover did 5 years ago, when Clover's on the next new thing, which is using the whole Vertex from Google, the generative AI. And here's Vivek, pretty much agreeing and saying, will of course be true for healthcare as well. And unfortunately not, it was not there anymore, but that's what it was. Whoopsies. Okay. Um, yeah, people say it's easy to say, no crying in the casino when you're the owner of the game. Again, they're saying the game is rigged. Yes, it is, but this is why we have our platform to help help level the playing field. Okay. We got something interesting people are talking about regarding Humana potentially being a buyer of Counterpart Health. Again, I haven't had a verdict on this in terms of my mind, but this is pretty compelling. And finally, we're simplifying our process, partnering with our outside vendors, through technology while reducing risk and improving our patient provider and patient experience. I mean, I don't know who these third outsourced party vendors are, but I mean, in the defense of Peter, the CFO of Clover, he did say there are some national players. I screenshotted a couple of things. This is pretty good, but if you look at down here, they're using their own data, right? So the future of healthcare, obviously, is about interoperability, which is what Clover's doing. So regardless if Humana signed on with Counterpart, it doesn't matter because it shows that we're headed in the right direction. They talk about diabetes and all these things, and obviously you're starting to realize that they're getting at Clover Health's white paper, but not so much that they're working with them, in my opinion. It could also mean that these are the itemizations that have the biggest star rating impact. More things here. Again, cardiologist, which goes back to the heart failure, readmission. Again, quite similar to the Counterpart, but again, it's tough to say. Lower hospitalizations, on track to 4.5 stars. Who knows? We may be as well for Clover. Now, this is where it gets interesting. They talk about medication adherence. Now, of course, that's what we do for Clover. So I don't know. I mean, again, this is Humana internal analysis. So I don't know if they're using Counterpart or not, but they are. What they're trying to do is they're trying to take the strategy of what Clover Health is doing. Either they're using them or not, but it shows that we're moving in the right direction. And the big thing here, support health plan with better medication adherence, lower medical cost, higher retention, which isn't that like Clover's Andrew Toy's words? So that's my argument. Okay. Now, we talked about this. Yes. So he talks about life moving pretty fast, talking about the Oracle transformation in 2022. What we found out in the last live is Oracle bought Cerner, which is the electronic healthcare record system, for $28 billion. So potentially this could be some form analogous to what Clover's trying to do, given that Vivek he's the founder of Clover, right? Co-founder or whatever, right? He also, Vivek starts quoting Charlie Munger. Again, it's getting pretty obvious and weird. He's very clearly talking about Clover. And it's very clear he uses this medium as a way to talk about Clover. I mean, you could see his last words were retweeting a podcast Obviously, there's some sports in here, but it was about retweeting a podcast. Excuse me, man. I'm like yawning a lot with his one of his workers, Kevin, and obviously he was talking about um, Clover here, as you can see, the HEDA score. So there's a lot again. So I think he's speaking directly to Clover. I'm just scrolling through. Okay, Cerner. Okay, here's the big thing. So Cerner sold for $28 billion. Cerner used to be publicly traded. Problem is, a lot of people don't have access to information. If you type in Cerner stock, you won't be able to find it online. It's a bit of a drag. So the beautiful part is our platform does this. So this here is going to be the desktop version. It's a bit different than the quantum charts that you guys are used to for all my mastering and lifetime members. This is actually a lot easier on your computer. It does the same thing, but it's a lot easier. So it's using the cloud, right? So very quickly for CLOV, you can see obviously you have beautiful support resistance lines now. Very elegant, very fast. We have fibs. We can look at the week chart, daily chart. Daily chart. Look at the support and resistant lines. Look at the fibs. Again, very sexy. Obviously, institutional ownership, analyst estimates, all this research. Now, what you could do is you could go ahead and click from Clover, generate report, and it generates a report for you now, right? We're going to be releasing this. It's obviously on our mobile version, so you have access to this anywhere in the mobile version and also desktop. But this is specifically to be for desktop. This is our confidential analysis, very high quality, Apple-like, Peter, right? You can see this is the analysis. Now, really, I want to talk about this here. So we could say here that we broke out of this resistance of 299. We bounced off of and broke out of 296, bounced off of 287, obviously fell below that, but we're essentially revolving up. And the question now is can we break out of 336, 356, 340, 357, 310, et cetera, et cetera. And if we could break out of that, then obviously we have a new upward trajectory trend line, right? You could go ahead and see and analyze this here as well. Okay. So now that we talked about this, let's go ahead and talk about Cerner. So beautiful part about our platform is we have access to all the stocks, including stocks that are not publicly traded anymore. So if you look at the weekly or at least all, this is Cerner. And you can see Cerner went as high as around $94, which is equivalent to around $27 to $28 billion. Obviously, you could calculate the intrinsic value of Cerner. In this video, we will not. I'm just basically showing the basics. The big thing that I want to communicate to you, I think that's actually the big, thing here is this. So if you look at Cerner, and if you go ahead and look at extended history, you can look at free cash flow. Cerner was back in 1986. Guys, they made like nothing. Like they were negative free cash flow in 1994, right? And look at the revenues. 17 million, 33 million, 40 million, 56 million, 51 million. So again, when you look at Clover, and if you see Clover in that trend, you're like, oh my God, that's not a lot of money. Understand that I'm expecting Clover to grow like this in its SaaS revenue, just like Cerner did. And again, if you're not up for this challenge, then go to Las Vegas, right? No one has time for your shit, right? So, but given that the market's already established, potentially, there were some unprofitable quarters here as well, but potentially, ladies and gentlemen, we might actually, instead of starting at 17 mil, we might actually start at 155 or 200 mil, given the market's already there. So it may be looking a lot more bullish than this. And obviously, as you can see, the whole free cash flow, how it basically transcended from 2002 and 3, you could see it turned positive. And I'm sure the stock price reflected that amazing change. Now, Let me go ahead and just flip this back to the annual. And I just want to basically focus on this. So you can see now the free cash flow has jumped to $1.1 billion. Again, Cerner, gross margins are 82%. High gross margin business. Incredibly great. Okay. Look at obviously net income, $500 million. It used to be more, 3/4 of a billion. So the point here is the money that comes in from Cerner, a lot of it turns into free cash flow. If you were to look at the free cash flow ratio and actually just do stupid math, you could say 1144.4 divided by 5764.82. You got I add extra zeros here. So that's about 19.85%. So 19.85% of revenue goes to free cash flow. So you remember when we did Clover, we did an estimation of 5%. Well, what this is basically saying is it's actually 19.85%, almost 20%, right? So obviously, see how we like to undervalue things? So that's actually pretty good. So this is going to be a free cash flow generating machine if Clover is able to capitalize. So I just want to make sure we talk about everything. We talked about Humana's stuff. And yeah, 22 minutes, guys. We talked about a lot. I'm going to go get some rest. I got to go to the hospital tomorrow. I hope this was to your liking. And yeah, that's it. When I'm going to keep this up. I want to read this again. But yeah, guys, love you a lot. Get that taken care of, right? I got to take care of mine too, right? Yeah, maybe you sis, who knows, for me too. I don't know. But I love you guys a lot, and I'll see you on the next one.